Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. For the markets, it's been a complete U-turn. We are now below the mark of 17,000 yet again. A 100-point decline coming in for the Nifty at the lowest point of the trading session. The Sensex 2 is down almost 300 points. And the broader markets are where the maximum amount of leading is. The biggest talking point today is the changes that have happened with respect to the debt mutual fund and the STT. And there was some sort of confusion coming in as far as the STT, whether the rate has been increased from 0.017% to 0.021% or from 0.05%, and now it seems that we are picking up from sources that Finance Ministry is likely to issue a clarification on the same. The Finance Ministry will clarify the STT on F&O soon. That's the word coming in. The intention of the Finance Ministry was to increase STT on F&O, so there might be an increase coming in from that 5,000 amount. If it is already higher, the government sources are telling us that they'll look at revisiting the circular and maybe revising and amending it going forward. So that's an important clarification coming in from the Finance Ministry, and we will be watching out for what really comes out, because for now there seems to be a lot of confusion around what the actual rate of the STT is. However, having said that, it's not only just the Indian markets which are coming under pressure. Look at the way the European markets are down. The European markets are down anywhere between 1 to 1.5% at this point of time. You have the French CAC, which is down 1.4%. DAX is down 1.5%. FTSE too has seen a cut of around 1.5%. And that's all because Deutsche Bank is coming under huge amount of pressure. The credit default swaps of credit of Deutsche Bank has increased materially. And that's making the street a tad bit worried whether Deutsche Bank is going to see some sort of contagion effect of what happened with Credit Suisse or not. So that has now become the more worrying point. The broader markets, as I talked about, is underperforming, a cut of almost 300 points on the mid-cap. And I said it's only IT which is outperforming a tad bit on account of that Accenture commentary, because other than that, metals and realty are the key drags on the market.
Yeah, absolutely. And in fact, that's been pretty much the case from the word go, right? Wherein the index was quiet, IT was the only pocket of outperformance, and now the laggards make it only worse, while IT continues to stand as is pretty much. But I think the big point right now is what sources are indicating to us that the Finance Ministry is going to be issuing a clarification on STT on F&O soon, and asserting that if STT is already higher, then necessary changes are going to be made. Let me welcome on board Kunal as well as Naresh as well. And Kunal, firstly, really, what happens if, of course, the Finance Ministry is saying that they're going to be issuing a clarification soon. But the base was already 5,000, right? There was this whole entire confusion which happened. But it seems that the intention of the Finance Ministry is, to up STT.
Correct.
So what happens in that case then?
So, of course, it's going to impact trading volumes significantly by all means. And I think it's not just one instrument that is options, it's also futures which is more impactful. And when we do a simple math, it's always easier to calculate a turnover of say for example 1 CR on futures as compared to in options, and I think that's where the impact is going to be much more higher. Now hopefully once the clarification comes out in the options, we'll get to know that how much is it from the 5,000 rupees, whether it's increased towards 6,000 or 6,250 odd. So we'll wait out for that clarification. But for the futures, it's going to be a significant impact from, for example, from a 10,000, one is now paying maybe 12,500 as a revised STT.
Good news, right, Kunal, especially in this current market environment when you're already grappling with net short positions by FIIs and the volumes are in any case drying up.
See, there are two important changes which have happened. I think yesterday or day before there was this do not exercise option which was also taken away from the options traders. That is going to impact the traders from the March expiry. And now you have the STT both on the options as well as the futures increased up higher. So these are not, idly foreign options or from the F&O market. These are not,
right. Kunal, just hang in there. We've got a live reaction coming in from the Revenue Secretary as well, Sanjay Malhotra. Let's just cut across.
They have their own whatever reasons. So how will
I have nothing to add to what the Finance Minister said. So the committee will look into all the issues that have been raised by various quarters. That's it. And I have nothing to add. Everything you want to know is in that, in her sentences.
And sir, also a lot of feedback on the markets because the LTC gone.
Isn't it interest? What do you get in debt mutual funds? You get share capital gains, so or you get debt interest.
So is it parity and equity that we are looking at, sir?
Parity with instruments which are of a similar nature. Income earning instruments should be treated as income earning instruments, and that is the direction in which it is gone.
Thank you, sir.
Thank you.
Thank you.
Wait for the backgrounder note, which will come shortly on STT. That's the word coming in from the Finance Ministry. The Secretary, of course, refused to say anything, but said that the intention was right when it comes to at least debt mutual funds to bring about parity, something that we've already heard. But yeah, Kunal, please carry on about the point that you were making.
Yeah, so it's going to deter a lot of trading activity from the F&O segment, because it's still an evolving segment for us. Yes, F&O is, I think, around 80 or 85% of the actual trading volume, and if that volume drops down significantly, it's going to have an impact on the overall trading volumes. So I think the increase in STT, both for the options and futures, is going to have a significant impact in terms of trading volumes.
Okay, so let's move on and welcome on board Jonathan Chisel as well. He's joining in to talk to us about the fundamentals of the market. He's, of course, a Deputy CIO at Westminster Asset Management as well. Before I talk about the Indian markets, Jonathan, I want your view about what's happening in Europe and at this point of time, especially with Deutsche Bank, wherein the credit default swaps actually have spiked materially, and we are seeing a deep negative reaction across all European markets, and there is this worry about a contagion effect. Your take as to how the banking system is shaping up in Europe?
Yeah, I think the ECB clearly earlier on in the week, after what happened with UBS and Credit Suisse, tried to sort of get ahead of the curve to some extent. And I think Deutsche Bank in particular has for some time been a bank that has from periodically come under attack, shall we say, for its relative weakness of its balance sheet and other issues that's been affecting it for some time. So I think the market has been to a degree expecting this on Deutsche Bank for some time. But I think, clearly the contagion issue hasn't been put to bed yet. And clearly, the slightly weaker banks out there are getting picked off, shall we say, for the moment. But so we'll be expecting probably some further action from the ECB to try and head this whole issue off.
Lower on just a whiff of CDS on Deutsche. That's really taking a knock for the entire region. In fact, it's a 230-point fall, no less, for the DAX. FTSE as well, over 100 points lower there too. CAC down 1.5% to FTSE MIB, Stock 600, a 1.25% drag coming in there as well. And I don't think it could be anything different for even the US pre-market futures, because they too are trailing right now. Even NASDAQ, for instance, which actually recovered most amount of lost ground from day before, which held up about 1% overnight, that also is indicating at best only a flat start. And these are just early days. Let's just wait for the markets to open. Who knows what's going to happen since then. 73 points lower already on the Dow futures as we speak right now. But let's take stock of our markets. IT as well is now actually giving up gains. It's only Infy which is holding up 0.5%, and TCS to some degree. The biggest mover on the index today is Kotak Bank, and that also is less than 1% higher. But a Bajaj Finance has cracked 4% right now. Adani Enterprise is down 3.5%. Bajaj Finance down 2.6%. Tata Steel down. Adani Ports, ONGC, and Reliance is dragging a fair bit. Once again, it's testing that 2200 level. It's a good 1.6% gash that you're seeing on Reliance. Other big boys like L&T as well, a big drag, and so is the case with SBI too. Kunal, in this wave of a fresh sell-off, or at least it seems to be the case, you think we'll get back to 16,800?
Well, it looks like, Aisha, but I'll still keep it more of a wait and watch. Actually today's trend is indicative of two different trends within two different sub-trends, because on one hand the index is still sideways. Now I think except for the last half an hour where there is some whiff of a movement which has come back into the indices, you look out throughout the day, the indices were absolutely flat. Nifty was trading at a 50 or a 70 point range, Bank Nifty at 100 point range on a very flattish kind of a note. But the broader markets were selling quite strongly. There were a lot of stocks which had come back into the selling spree. Many stocks have witnessed a breakdown for themselves. And this generally indicates that we are now into a zone where the indices are not signaling much, but the broader market weakness is getting a bit more prominent. So if the weakness in the broader market accentuates for the next couple of days, then I believe that sooner than later the indices will also come out of this 400 point out consolidation. So which way the indices would break out, that will be a bit tricky to preempt. But I think if we break below or rather if the broader market continues to go into a weaker mode for the next couple of days, higher chances that we may drift back below that 16,800 mark as well.
Okay, let's go across to Naresh as well if he's there with us to understand what his take is on the markets at the moment, because clearly 17,000 has been given up, and even from the Bank Nifty point of view, which was outperforming earlier, is now seeing a cut of almost 170 points actually. So a bit of an underperformance coming there as well. Naresh, your take on what's the best strategy to play the markets at this point of time?
Strategy remains the same. Continue to hold on to the position with a stop loss at 16,800. So if you look at the markets today, the two heavyweights in the banking space have not corrected. So HDFC Bank is actually up 0.1%. You have Kotak Mahindra Bank up 1%. We are seeing a lot of volatility across the world. So we've seen a cut of say 1.5% on DAX happening in quick time. Some bit of a recovery there. So this volatility continues, and we need to wait for a resolution of this volatility beyond the price point. So if it goes below 16,800, then the downside opens up. If it sustains about 17,200, that's when the upsides open up. So we are right in the middle of the range. We are just flip-flopping with a lot of volatility. We're not taking a direction as yet. We are not seeing a heavyweights take a major dip. So for now, wait and watch. Wait for further price action to take the next action.
Right. Jonathan, just wanted to understand what is it that you're making of the India market right now? I mean, many believe, including Citi, Bank of America as well, that valuations have become attractive. But what do you begin to buy now?
Yeah, no, I think you're right. I think felt for a little bit that this sell-off was sort of nearing the end of it. That there was, potentially another, I guess, 5% or so downside risk to the market. And when you compare India to other emerging markets, it has undone some of that outperformance of last year, and it was getting back to attractive levels. From a looking at the actual market, I think IT stocks, as you were just highlighting, have been holding up. We always like to have a good balanced portfolio of Indian sectors, be it IT, be it financials. So I think the broader market obviously is coming across coming off across the board, and certainly there are some some of these valuations are now looking a bit more attractive than they were 6 months ago or so.
Okay, so that's the take coming in, how the valuations stack up for the Indian market at this point of time versus rest of the globe. But we'll do one thing, we'll slip into a very short break with the news that the market is pretty much at the lowest point of the trading session. Yes, there has been a bit of a bounce back, but we'll track that when we come back.
Back for closing trade, still awaiting that backgrounder on STT and the clarification from the Finance Ministry. While it's still awaited, the markets definitely are in a bit of a rocky situation. So we are, back to sub that 17K mark. We're down almost about 100 odd points at an index level. And of course, the breadth is the one which is getting really battered as we speak. Your laggard sectors are financials, metals, real estate, infrastructure, media, power, and banking in that particular order. Bajaj Finance and Bajaj Finserv are the ones which are really nosediving. Tata Steel is down 2%. There's Hindalco, Hero MotoCorp, L&T, etc., which are all weighing heavy on the index, as is Reliance, in fact. It's down to now 1.5%, almost close to that 2200 level. In fact, 2218 on the futures, spot currently at 2214, thereabouts as we speak. Kunal, you had flagged off the weakness in Reliance, what you see on the charts. You think it'll get worse from here before it gets better?
Well, I think it's already in that worst stage so far, because it's unable to lift off above major kind of resistances. 2250, 2300 mark has been a major resistance for Reliance Industries. It was actually a major support since last 1.5 to 2 years. We've seen a multiple bounce back for Reliance Industries from those levels. I think yesterday or day before there was an attempt to come back towards the 20 to 50 mark. We closed about this level, but the way in which the stock is showing weakness and not being able to sustain even for a couple of days above that 20 to 50 mark shows the inherent weakness from the bulls in trying to hold up those levels for the stock, and I believe that's not an ideal or a good sign for the stock price. Now, it's always better that you buy the on confirmation. So I think in that regards, I would wait out for a point where the stock breaks past about 2,300 mark. That could be a zone where we will be relatively higher probabilistic that the stock has formed a base and it's now trading about the key resistance level. So as of now, would avoid trading on the long side. Only about confirmation of 2,300 on closing basis. It makes sense to buy the stock.
Okay, Jonathan, I wanted your take regarding the banking sector because it's been coming under pressure of late, moving sideways a lot. Do you think this is an opportunity to kind of maybe lap up some of the names, or would you stay away from them at the moment?
Yeah, look, I think India's blessed with some very really good banks, very high quality franchises, and a good sort of growth trajectory. So there's a lot going for the Indian banking sector, very well regulated as well. I think the issue obviously is globally the sector has come under a huge amount of pressure. And so there will, to some extent, be some sort of ETF and sort of passive selling that'll remain sort of a headwind until we get some resolution, globally in the whole sector. But Indian banks themselves, we continue to like Indian banks, and certainly from a regulatory perspective, a lot of the issues that are affecting global banks elsewhere in the world don't particularly you don't have the same issues with Indian banks. Obviously, Indian banks are primarily domestically focused, very little overseas operations these days. So yes, we do like the sector.
Right. Jonathan, just wondering, how is it that you're viewing Indian IT right now, and especially in the light of the commentary from Accenture yesterday? Yes, while what made headlines was the 19,000 job cut, but the underlying commentary was strong. Correlate that with what you hope would happen to Indian IT in that light, because pretty much the global environment is the same, and IT is pretty much the cloud kitchen for global banks and BFSI sector.
Yeah, absolutely. It's the dilemma going on at the moment. You've got a good structural story for the IT sector globally, but obviously, as you rightly point out, the financial sector and banks in particular have been certainly big clients for these IT companies, and until we see some sort of resolution, then a lot of investors are just going to be looking at that sector saying there's earnings risk coming through there. So in the short term, yes, these are good business models. Yes, they're fairly defensive, but in the short term, I think, again, until we get some sort of resolution or some sort of calming down of this whole mini financial crisis that we've got going on at the moment, then the sector's likely to underperform to an extent.
That's the take coming in on the IT sector. Bit of a dilemma that all of us are facing with respect to whether it is priced in or whether growth is something which is going to slow down further. But let's get some technical picks from our technical experts. What are the closing trades they're executing at this point of time? Nuresh, you go first.
So that would be a sell on Aarti Industries, a fresh 52-week low here. The stock could go towards, say, another dip towards 470.
What about you, Kunal? What are you strategizing with respect to your closing trades?
So it's a sell on Manappuram Finance, stock forming a near-term top at the 121.22 mark. So would be looking to sell the stock. Targets in the near side would be looking out for closer to 112, 114 range.
Okay, Jonathan, great to have you on the show. We'll let you go on that note. While of course, it's the European markets which currently are getting jittery. Deutsche Bank has slid about 8% after the sudden spike in the cost of insuring against its default, that's CDSs, and our markets as well feeling the heat. In fact, as we take a break here, something like, considering it is Friday, and if you are aware that in our day-to-day lives there are multiple food items that are named after famous personalities as well. Did you guys know that?
Not really. Let's see.
Name one. Eggs
Jalebi, maybe? Oh, eggs Kejriwal. Oh, yeah.
Foods
I don't eat eggs,
celebrities.
so yeah, I don't know. Let's watch the report to get more.
Yeah, Ankita has found out why these names were attached to certain food items. Let's find out.
Well, the cut is getting deeper, not only back home, but across the world as well. We are seeing deep cuts across Europe. The Dow futures are now down a good 125 points, and the Indian market too is at the lowest point of the trading session. 16,950 is where we are for the index. The Sensex too down about 350 points. In terms of the sectors, actually most of the sectors have turned red. In fact, IT too, which was massively outperforming at the start of the session, has turned into the red. So there is none of the sector which is holding up in the green at the moment. And if you look at the key stocks which are the drags on the market, it's Reliance, which is adding almost 30 points on the downside. It's just around the 2200 mark, followed by L&T as well as Bajaj Finance. These two stocks are coming under pressure too. And then Axis Bank, SBI, the other heavyweight from the banking sector, which are putting pressure on the market at this point of time. So not looking like a happy Friday for the market at this point of time. A bit of a red across the screen. Let's welcome on board Kunj Bansal as well. And Kunj, I wanted to discuss some of the stocks and news with you. First up, let me just highlight some of those stocks. Of course, the first one is the latest announcement coming in from the finance bill. So no indexation benefit coming in for debt mutual funds. And as a result of that, there's a negative impact on mutual funds, negative on NBFCs, housing finance companies, and moderate to low impact coming in for AMCs, while it's marginally positive for life insurance and marginally positive for banks. That's the word coming in from CLSA. Separately, HAL is the other stock that we are watching out for. OFS has opened for retail investors today, and the retail portion was already subscribed 85 times. So 85%, I beg your pardon. So after that deep gash yesterday, that stock is reacting positively. And then IT space is something that we are watching out for. Accenture numbers is something which is having a positive rub-off impact as well. But Kunj, let's begin by talking about the AMC space. The brokerages are saying that the impact is not going to be huge, but there is a bit of a knee-jerk reaction coming in. All of these counters are down anywhere between 4 to 5%. Is this a buying opportunity, or would you just wait by for the clarity to emerge and the street to digest the news flow?
Yes, so a lot of things have happened. First of all, the market itself has been weak. So we know that from the December peak, now we are down almost 11%. That's in the short term. In the medium term, we are at the 2-year-ago level in terms of market and in terms of indices. Now, in that weak or weakish kind of market, are the news flow these are kind of happening. Specific to BFSI or more specific to AMC space that you are asking me about, there actually has been a continuous series of negative news flow, so to say. So today or yesterday, it's the taxation on the debt funds change that is the impact that is having. Before that, not that it has been implemented, but there was a talk that they may be asked to include brokerage in the expense ratio. So that was the other negative development that was, or if it happens, if it gets executed, then that will be the negative. And in any case, regulator has been putting pressure on AMCs to kind of monitor and moderate their expense ratios and things like that. So it's going to be a difficult business condition for all the AMCs. The impact will probably keep hitting them slow and steady over a period of time. And as a result, that might continue to have impact on their share prices and valuations. Let's keep in mind that even at the current share prices, the valuations of AMC space is not something which is really attractive. It's still on the matured or on the expensive side. So I don't think it's a buying opportunity on the immediate sense. One should wait and watch, see the market sentiment, see the sentiments toward the AMCs, see the news flows and actual developments, any clarifications if it comes, and things like that. So it's going to be a long haul.
Okay, it's going to be a long haul for the market. Let's see how it actually turns out. But let's also address some of the stocks which are buzzing on price volume action as well. TTK Prestige has seen the biggest single day gain since June of 2022. So volumes are 24 times the 20-day average, and it surpassed the 50 and 100-day moving average. So TTK Healthcare is, is standing tall in this kind of market, a gain of 14% on that one. You have Cyient as well from the IT pack, which was outperforming at least till some time ago. It was up around 5 to 6%. It's hit a 52-week high on an intraday basis, biggest single day gain since April of last year, and the volumes too are 6 times the trading averages. Puravankara is the other one which has seen the biggest single day fall. The company doesn't have too much exposure to Maharashtra, so I'm guessing the reaction is not to the report suggesting that there might be a stamp duty hike coming in Mumbai. But nonetheless, the volume is 5x the 20-day average, and it's trading below all the key moving averages. Kunal, your take on any of the counters, TTK Healthcare, Cyient, Puravankara? Would you look at buying into the momentum on any of them?
Yeah, Cyient looks attractive. In fact, was actually looking out for a trade on an intraday basis for Cyient when the stock had crossed about the 965, 970 mark. That was also the breakout point for Cyient on the short-term charts. Again, a breakout more in terms of volume-based up move for the stock price. And in fact, over the last 3-4 months, the stock has not even broken below the 50-day moving average, which means that the medium-term trend also for Cyient was extremely strong. On the other hand, TTK, healthcare, etc., these stocks are still struggling into finding their own trend. They are struggling to hold on to their long-term averages. So not too much of a consistent trend into these names. Cyient is something which I would still look to trade on the upside. 965 could was the initial breakout point. Now that acts as a support. So till the time the stock trades over 965 mark, we would be looking out for trading on the positive bias.
And I think intraday it's made a new high as well, Cyient for itself. In fact, similar is the case with the KPIT Tech as well. That is also at a new high. Sonata Software almost close to 1. Midcap IT is where most of the buoyancy is in today's trading session. Okay, I stand corrected. Sonata Software has had a bit of a jagged session, but yes, it's close to a high regardless. Naresh, what do you make of these midcap IT movers? Does it seem like there's opportunity to trade from these levels?
So would be a little cautious in some of them because a lot of them which are doing well now, Sonata Software has already made a very huge move over the last 1 month, 1.5 month. So I would wait for a little bit of a dip. A lot of these names which have been outperformers can take a pause. I would rather go look out for reversal signals in the ones which have not done really well. So something like a Tech Mahindra, if that comes up closer to that 1,000 mark, that would be interesting. 1,050 mark, but the rest of the names, the risk rewards are not as great.
Okay, so the risk reward are not big on many of them, but some of the select counters is definitely that you can look at. Kunj, what about the entire real estate pack? Because of course, there have been individual news flows, Sobha, which was plagued down by the IT searches. Now today we have Purvankara, which is down in the trading session. And then of course, these reports are coming up talking about a stamp duty hike at a time when a lot of these players were actually requesting a stamp duty cut. And we spoke with the management of Rustomji just yesterday, who pointed out to the fact that even the Gudi Parva sales weren't as excited as we have seen over the last couple of years. Do you think the excitement around real estate has completely fizzled out?
Yes, so I don't know if it has completely trickled down, but again, let's look at this thing in two terms. One, in terms of the business performance of the real estate sector as a whole, and real estate companies in terms of unit sales and the revenue collection. So that clearly has taken a knock. And one of the main reason has been the consistent hike in the interest rate globally also, of course, and in India specifically. So if we look at India, in about last 1 year or so, RBI has increased its repo rate from 4% to 6.5%, which is a 250 basis point hike in less than 12 months. And that's a sharp hike. Not only that it's a sharp hike, it's a sharp hike in a reasonably short period of time of less than 12 months. Now, that initially maybe did not have an impact as much on the first-time buyers who generally buy the houses on borrowed money, on the money that housing loan that they take. Now, with this 250 basis point kind of hike, this has clearly impacted their capability to borrow loans at a certain interest rates and the repayment capability, the EMI calculations and the durations, etc. So that indeed has impacted the sales at the lower to economic end of the housing space, and that obviously is reflecting on the company's performance. So that's one thing. The second thing, as we have been repeatedly discussing, that market hasn't been giving any great, confident, positive signs. In fact, slow and steady, it has been dithering down. Whatever could be the reasons. Reasons could be news flows. Reasons could be the relatively subdued quarterly numbers that we had. Reasons could be the continuous global outflows that we are having. So in such kind of scenario, market keeps looking for sectors to kind of take its money out, or to kind of bring down the prices of stocks on rotation basis. The same happens in the rising market as well. The market chooses sectors to keep putting in additional money, and we see by rotation sectors going up. Right now we are in a falling market, so by rotation we are seeing sectors falling. So to summarize, the market sentiment is not there, and in addition, the business performance is getting affected largely because of interest rate hike, maybe a little bit because of the inflation and people's money going because of inflation, they are priority to spend money on a day-to-day requirement. And the percentage of that money has gone up. Let's keep in mind, if there is an inflation in food products, inflation in consumer goods, which are more necessity, the house buying can be postponed. So yes, these are the reasons that we are clearly seeing a pressure on this space.
Okay, that's the take coming in on what we're seeing right now within realty. By the way, Deutsche Bank is now down almost 10% as we speak. So that's really facing the heat right now. And even US futures have worsened from where they were even half an hour back. We're almost staring at a 200-point fall for the Dow futures, 0.5% lower for S&P. And it's now inched into the red and drifted into the red even for the Nasdaq futures. For the European markets, of course, things are only getting worse. It's a 1.5% cut coming in across the board, with the FTSE MIB now staring at almost a 500-point decline, no less. 100 points gone for both CAC as well as the FTSE, and the DAX is now staring at a near about 250-point decline as well. Our markets as well seeing that rub-off play out. 16,955 thereabouts is where we're currently at. Kunal, I guess from banks, which was the kind of weakest link, along with, of course, Adani names, which began all of it in the month of February. You think now it's the financials? Because, the way Bajaj Finserv and Finance are cracking, of course, it's a news-based move, but it's really dragging the entire sector lower.
Yeah, I think over the last many weeks, many sectors have participated on the downside. We are forgetting the auto stocks, M&M, which has fallen by, I think, more than 30% in just the last, I think, one and a half odd month. Maruti has fallen sharply. I think it's on the verge of breaking below that 8,200 major support. Tata Motors is also closer to that 400 levels and on verge of breaking below those levels. Eicher Motors is at a multi-week low. So that's also another sector which has shown signs of weakness. And this is not helping the cause of the markets to lift off or find any kind of a or convert any kind of a major short-term rally into a major trend for itself. Because with the lack of sectors participating on the upside and more number of sectors participating on the downside, the bias for the markets would remain on the negative, or the skew would be on the negative side. Now, the only factor which I would probably be keeping a watch on would be that if the markets are tilting towards the defensives, like what, for example, we saw the FMCG stocks making a comeback, I think, a couple of days back. HUL, Britannia, Nestle, many of these stocks managed to see a good spike for themselves. But then again, there's no follow-through up move. Pharma stocks have seen a good pickup. I think Glenmark, Aurobindo Pharma, Zydus Life, these stocks have shown some good price action for themselves. But again, no major sector trend as such. So there are few pockets of stocks within these two defensives, FMCG and Pharma, which are showing signs of strength as well as resilience. But again, it's not trickling into the entire defensives getting bought into. So that's what is tend to be a bit of a confusing sign, that if the markets are not tilting completely in favor of defensives and there are still those odd sectors which keep on participating on the upside, the market trend would remain a bit more undecided. So we'll either wait out for the internals to be a bit more strongly skewed towards one side, where the skew is more towards the defensives, and the high beta sectors like banks, financials, they tilt completely towards the downside, or we wait out for the breakdown point, which is 16,800.
Okay, let's also look at the flashes for you at the bottom of the screen. The stock has pretty much recovered from the day's low on Nykaa, but there seems to be a problem of attrition at the higher level, because very recently we had seen a change at the CFO level as well, and now there are 5 other major executives which have resigned from the company. They include, of course, the Chief Commercial Operations Officer, the CEO of the wholesale business, the Chief Business Officer of the fashion unit. So a lot of attrition happening at the higher level for Nykaa, and that seems to be the pressure as well. Kunj, your take as far as some of these new age tech companies are concerned? Would you have any top bet there? Zomato, Nykaa, Paytm, PB Fintech?
So what happened is, about 2 years ago, all these companies, because of the positivity in the market, the continuous inflows in the market, bullish sentiments in the market, were able to successfully come out with IPOs despite being loss making. And that continues to remain the case when it comes to their financials, a little bit here or there, based on partly changing the way you put out the numbers and partly because of the business operations. But on a net basis, there is no significant profitability in the new age companies. Now let's put this alongside with the fact that market has been, as I was saying earlier, is at a 2-year-old level in terms of medium term, and in terms of short term, from the December highs, it's down more than 10%. Now, when market is down in such a phase and in such a bearish phase, obviously the stocks from the sectors which have consistent profit making track record of 5-year, 10-year, in fact 10-year plus, have also corrected with this kind of correction in the market. So any smart, sane money will obviously in such kind of market will go into the stocks which, as I'm saying, is have profitable, have track record, have brands, have distribution, have management capabilities proven, have business models proven, instead of trying to go into the companies whose profitability is not there and the visibility at least for next 3 years is not there. So that's what will happen. I think in the new age companies, the interest will be more of trading kind of interest, trying to capture 2% move here and there, and with the strict stop losses, one can get in and get out. But the long term, the medium term money will go into, as I'm saying, the profitable sectors with brands, something like, let's say, consumer durables. So I don't think for a medium term investor, genuine, sincere, long term buy and hold investor, new age companies will be offering any opportunities at this point of time.
Kunal, you were just mentioning the kind of correction that's taken place in autos. M&M, for instance, a 30% fall from the top. I mean, one could be prepared perhaps for another 10 to 15%. Who knows if the markets were to crash lower from here. But right now would not be a bad point to perhaps add to positions or even buy afresh for those who've completely missed out on the auto rally, for even a Tata Motors, Maruti or an M&M.
So, technically it's a good level. 20%, 30% down for these stocks is of course considered to be a very good level. But then, we look out for a point where the selling or rather the demand overpowers the supply for the stock price. That's still not the case. Now look at the last 5 or 6 days. There was at least some whiff of a rally which came back into the indices. There was a 300, 400 point rally on the Nifty. There are a few sectors which emerged as a strong turnaround candidate. But what did M&M do? The stock rallied up from 1147 to I think 1168 or 1170. So which means a meager 30 point rally in the span where the indices moved up significantly higher. Many of the stocks, even large cap names, for example, like Reliance, saw a good 4-5% plus kind of a rally after being beaten down, and that is inherently a very low beta kind of a stock. So that itself tells you that the selling is still very strong into these auto stocks, and we'll have to wait out for a point where the selling abates significantly. These stocks, they don't or they stop participating on the downside, especially on the down days for the markets. That's going to be a point where we may expect that probably the selling is over, and that could be a good zone to buy. As of now, I would keep it under a wait and watch radar, but maybe another 5% to 7% selling looks like in the offing for many of these auto stocks.
A bit of a slip for the market because now we're below 16,950 also. So it's a good 150 point cut coming in for the Nifty. And the last cut seems to be a bit sharper. And the Sensex now is down a good 500 points. And the mid cap and the small cap index are almost trending towards that 1.5 to 2% cut coming in at the index level itself. Let's take a look at the Bank Nifty as well as to what that is doing, because that too is suggesting a cut of almost 280 points, and that's where the pressure is building from. Bandhan Bank, which was doing well for most part of the week on account of that news flow regarding bids coming in for its stress asset, has given up pretty much all the gains. It's sitting with a cut of 5% now. PNB is down 3.5%. IDFC First Bank, Bank of Baroda, SBI, they're all taking a huge knot. In fact, SBI, that heavyweight, is down about 1.7%. It's only Kotak Mahindra Bank from the Bank Nifty which is managing to hold on to the green, because rest of the other constituents are all in the red. Kunj, we have spoken about the banking space, but let's talk about NBFCs as well, because with the latest amendment as well, we have seen that a lot of them were depending a lot on debentures and MLDs, etc., as their fund needs as well for their fund needs. But now the cost of funds is expected to go up with this announcement coming in, and the best of the NIMS expansion seems to be behind. Which are the companies that you think would be able to manage the pressures now well going forward?
So there are two ways to look at it. One, yes, in general, raising money by NBFCs because of the recent changes, specifically the changes in the structure of the debt mutual fund taxation change, is going to become expensive. They will probably have to offer higher rates to raise the similar kind of money, and despite having the same rating which was there earlier, investor would want to be compensated at least partly for the tax loss that he will incur. So that's one part of it. In terms of the business model, quite a lot of NBFCs, I don't think are at a stretched business model sitting today. So we might want to leave aside some microfinance companies from this general comment that I'm making in terms of the financials. Some of the microfinance companies might be having weak financials, but otherwise most of the NBFCs, especially at the upper end of the size in terms of the book size, do have reasonably decent financials, whichever measures we look at them in terms of the net interest margins, in terms of capital adequacy ratio, in terms of cost of operations, and things like that. So it will not have a material impact on their working or on their financials. But yes, it will increase their cost of funds marginally. Difficulty in raising the funds? No, I don't think that will be the case. It will be same based on the rating that they were having earlier, will continue to be the case. But yes, the cost of funds might go up. They will have to put in a lot more effort to raise the similar kind of money, and that might have a marginal impact on their profitability. But will it have an impact on their sustainability in terms of their business model, in terms of their longevity of wanting to continue to the business? No, it's not such a big impact event.
Right. Okay, we'll let you go on that note. Thanks so much for joining in right now, Kunj. Closing in the day, pretty much around the lowest point in the day, 100 points lower as we speak. No, 150 points lower. I stand corrected with that. It's a good 1% fall actually, 16,900 thereabouts, 16,920 actually on the Nifty. So it's been quite a sharp vertical fall, and we've fallen from the day's highs around that 17,100 level, a good 1% actually. The sector is really under pressure today because of the news-based move has really been the financials, because they are the ones which have really gotten clobbered. So be it a Bajaj Finance, HDFC AMC, which has fallen 4.5%, Finserv, Shriram Finance, SBI Life, even some of these gold financiers, Muthoot and Chola Finance as well, have fallen today. And of course, HDFC Life, ICICI Pru, M&M Finance have definitely taken the hit, as have AB Capital, etc. as well. IT as well has managed to actually give up its gains. Infy's closing the day absolutely flat, and to think of it, IT was actually the leader sector today. Kotak smidge in the green, less than 0.5%, and maybe Cipla, which is holding up 1% or so. DRL flat, so is the case with Apollo Hospitals and Divi's. But it's really financials under the weight of which you've seen quite a bit of selling coming in, as has been the case with metals actually. So, Jindal Steel, Tata Steel, they as well got really clobbered down. HAL managed to recover quite a bit today, 3% higher. Today, of course, the retail book of the OFS got opened. Oro Pharma, Cipla, Hindustan Aeronautics, India Mart, these were all names which managed to hold out in trade. Kunal, you think there is a trade right now in this kind of a market for pharma?
So, specifically for Glenmark Pharma and for Aurobindo Pharma, yes. Even for Zydus Life, I think it's a good trade where traders could look out to build a bit, I would say, low position size kind of a long positions. But I would believe that these stocks, they can actually stand out in tough volatile times. They've managed to do it over the last 1 or 2 months. Oro Pharma apparently has been a surprise package, because that stock has recovered more than, I think, 15% from a 440, 430 to almost a 500 plus mark where the stock is trading right now. Zydus Life has been doing consistently quite well, I think, over the last 1 year. And Glenmark Pharma has also emerged as a breakout candidate once it broke past about the 415, 420 mark almost a month and a half out back. So these stocks have been showing good strength, good resilience. So I think these are the only pockets within the pharma pack which I think a short-term trader could initiate a trade on.
Well, Nifty Pharma has definitely snapped the 5-week losing streak, so it's managed to gain 0.7%, and that one is one of the key outperformers. As a week, I'm talking about not just today. So if you bring up the 5-day chart, that will tell you it's up around 0.7%. And then FMCG2 has snapped the 2-week losing streak, ending with a bit of a green. The biggest sectoral loser this week was clearly realty. So that declined as much as 4.5%. So that pressure of the rate hike is something which is building up there. And Nifty Bank managed to outperform Nifty this week. So ICICI Bank was one of the top gainers, and Nifty 50 as a whole has managed to decline 3rd week in a row. It's down 0.9% for the week. The biggest gainers for the week were the likes of HDFC Life Insurance, SBI Life Insurance, as well as ICICI Bank, as I pointed out. So Slowly and steadily, these stocks have been moving higher, and for the week as a whole, they were the gainers. On the losing side, it was Adani Enterprises, Adani Ports, cut off around 5 to 7%, and then followed by Coal India as well. However, talking about the day today, it was IT which was in the front foot, at least at the start of the trading session, completely fizzled away by the end of the day, but at least some of the names in the front line, the likes of Infosys and L&T Tech, have managed to outperform a tad bit. From the pharma space, it was Aurobindo Pharma, Cipla as well as Gland that managed to outperform. On the losing side, Indiabulls Real Estate was down a good 6%, DLF down almost 4%, and even a 4% cut coming in for Lodha. For the week, the biggest gainers include the likes of Gland or Aurobindo Pharma. On the losing side, of course, it's again the realty names like Sobha, which was down about 20%. Overall, I have to say, wasn't a very great week for the market, and the coming one is going to be all the more important. It is going to be the monthly options expiry. It's going to be a truncated week. So on Thursday itself, it's going to be expiry. We have seen that 3 months on a trot, the Indian markets have been at the losing end, and the big question is whether for 4th month we will lose or not, because then the indicators change completely, at least on a technical basis. So that's the key thing to watch out for. But Aisha, other than that, a very, very listless in terms of the markets, no major trend emerging, and maybe all eyes on the next week with a lot of events and the end of the financial year lined up.
Yeah, the end of the financial year, Kunal was highlighting earlier today that today, 3 years back, 2020 is when the Nifty hit that COVID low of 7,000. That 7,500.
So we have made a big.
Next day was also a lower circuit, a down day.
No.
Right?
Today, 24th March, the markets made a low, and post that, we've just managed to rise up higher. So we managed to hit lower circuits prior to that 3 years back.
Okay.
Two lower
Prior
circuits
to that.
prior to that.
Seems such a distant memory now.
Yeah, that
we're
gives
having
you
a hard
back and
time recalling. But yeah, hopefully today
Remains
as
a
well,
distant
or
history
maybe this
only.
year also could be a repeat. Who knows?
hopefully 3 years from
Maybe
now,
today
things
is the
will-
We'll
worst
be talking
day.
about what, 32,000 or something on the Nifty. If 7,500 became 17,000, maybe 34, 35,000.
I
Who
hope
knows?
match was so simple in market.
One can
Well,
hope, right?
We can only wish for that. But anyway, let's hope at least in the interim, much like 3 years back, today turns out to be the worst day, and it's only uptick from here. But if wishes were horses, we'll wind it up right here then on this edition of Closing Trades.